Can everyone hear me? Good afternoon, everyone. Thank you for joining us right after lunch. I know it's time for la siesta. Hopefully, we'll try to keep you entertained and awake. The session we have actually this afternoon is Fintech 2020 Revolution. 2020 is right around the corner. We've been talking about a lot of changes in the industry for quite some time. And the way we build that session today is to try to give you the perspective of now, not in 2 years. We have exceptional speakers from all around the world, and the way we're going to try to approach the discussion is going to be from the incumbents, the established players, the banks, the financial networks, and how they had to reinvent themselves to stay relevant. And then we'll move slowly towards the fintech startups and how they are kind of like rattling a little bit the world of finance and the world of payment. And we'll talk about regulation. Can the regulator keep up with what's going on? And from there, we will actually kind of focus on a few specific use cases like InsurTech, but also on the user experience, which is very important. And as Patrick Gauthier from Amazon was mentioning before, we should always keep in mind that the user is at the center of everything that we are doing as professionals. If we forget that, then we become very irrelevant. That being said, I'm Sébastien Tavot. I'm VP Developer Experience at Envestnet Yodlee. I've been prior to that in companies that are but all across the industry, PayPal, MasterCard. I've done Zelle in the US, if you know about Zelle, real-time payment. So I've seen a lot of different new technology, new product, new trends coming up. I'm based in San Francisco, in Silicon Valley, where we kind of live and breathe the startup world, but it's also a bubble. Our mind is really narrow focus on what we see and experience within a few miles. That being said, that also triggers some things that sometimes we should be more aware of. And that's why one of the first company I thought of for that panel is actually a bank out of Brazil. I'm going to tell you a short story about that. I was invited at one of their conferences that they had every year. They have that every year in May. And after I did my talk, my usual tap dancing, jazz hands, Georgie here came on stage and showed something that blew my mind. Georgie, hold on, I'm still introducing you. What was happening is they demonstrated the first live production-ready payment via blockchain, an effort across banks. The US banks have been talking about that, have been thinking about that, have been trying about it, but it's still experimental. What they did in Brazil was real. And I looked at it, trust me, I'm a techie, so I kind of looked at what was going on. So that gave me a bit of a different story from what I was living and breathing in Silicon Valley. And seeing that, I thought it was important to share that with the audience. The re-evolution of fintech is global. We should not rely just on the usual fintech spots where you have Silicon Valley, you have New York, you have London, you have Singapore, you may have seen in Australia, but we need to be aware of what's going on around the globe. So it's my great pleasure to introduce actually the first speaker. So Georgie Krug, goes by the name of Krug, is the IT director and CIO of Banrisul, one of the largest banks in Brazil, the largest bank in southern Brazil. They are sponsoring a couple of football clubs there, and there's discussion around the jersey, which one you like, which is always interesting and entertaining when you know that football is not very important in Brazil. In his role, actually, he's also on the board of the Brazilian Bank Association, FEBRABAN, on the Security IT Committee, so he's very focused on security, and a lot of different associations. Sorry, Georgie, I'm not going to go through everything, but he's also an advisor at the council member of the Smart Card Alliance Latin America, and he's also the head of the ACRS, the Rio Grande do Sul State Digital Certification Authority. What I asked Georgie, and actually Ivo da Silva, who's an IT security consultant with Banrisul for the past 15 years, I think, is to come and talk about the journey from a traditional bank that they were 10 years ago at Banrisul to a digital bank in Brazil and across not just Banrisul, but across all the banking world in Brazil. A lot of things are happening, and I think that would be interesting to start there. What are the banks doing to change and reinvent themselves? And then we'll move on to the next one. Jorge, Ivo, please.
Good afternoon. Okay, after lunch. I am George Krug, and I shared this presentation with Ivo Aurelio Silva, our Banrisul advisor. As Sebastian mentioned, you talk about the journey for digital bank in South Brazil to thinking like a fintech. Okay, let me see. Okay. This is the key point of our presentation, 90-year young bank, what happened in Brazil in terms of digital bank transformation. We have done to change the way doing business following customers transformation, and how we are acting to work in the fintech startups, the best solution for our customers. The first two situations a little bit about exactly Banrisul and is in the map. Okay, here we can see the Rio Grande do Sul state, south of Brazil. Porto Alegre is the city that Banrisul is based. The population in south of Brazil, it's 11 million inhabitants. GDP, more than 100 billion GDP, and main economic activities, agriculture, industry services, and livestock. And Banrisul is a regional bank in South Brazil, as a public institution, founded in 1928, more than 14,000 employees. It's the 60th largest bank in Brazil, with 4 million clients, with the total access to 19 billion US dollar, a loan portfolio, 8 billion loan portfolio US, reached almost 100% the Rio Grande do Sul population. Okay, now Ivo will talk a little bit.
Well, let's talk a bit about what's happening in Brazil in terms of digital bank transformation. Brazil has faced in the last years a continuous increasing in the market size for the banks. Here you can see that in 2017 it was always 140 million of clients. But we have three forces that are pushing the financial system to move forward. Here you can see the macroeconomic changes. Brazil, as many countries, has faced a lot of macroeconomic changes. We have a very strong regulator here, that is the Brazilian Central Bank, that is pushing for good business practices. And in the top of that, we have the digital culture that is transforming the digital, the way of that we do the business. Here we have some examples of the traditional banks, what they are doing in terms of digital transformation. The traditional banks are our main competitors, and we have some examples here. We have Bradesco, that is the big one. We have Banco do Brasil, that is a federal state bank. We have Caixa, that is another federal state bank, and we have Itaú, that's a private bank. All of them have projects and strong investments in digital transformation. And besides of the traditional banks, there was some well-succeeded new players in the market. We have Nubank, that's a bank without a physical relationship. We have the Original, that's a native digital financial institution. And we have Guia Bolso, that is a company that develops some tools to financial management. And you have Neon, another bank without a physical structure. Well, here you can see the effect from that market strategy. You can see that there is a strong migration from the traditional channel to digital channels. There is two facts that you can see here. One of that is that the Brazilians are closer to their banks. You can see there in the bottom the market size, and you can see the use of the branches and the EPOS. And the second fact is that they are moving to digital. They are moving to digital in a strong way. In this context, let's talk a bit about Banrisul, what Banrisul is doing. Banrisul is a Brazilian traditional bank, and we have a very strong position in the market. We have here some channels of the physical channels of distribution, as you can see here. It's like another Brazilian banks, no? But here there is interesting information that you have very strong personal attendance. We have more than 2,000 points of personal attendance. This here you can see that. But the time slips away, and we're also moving to digital. We're still competitive because we are following the market movement, the market transformation for many years. And it's not different nowadays with the digital transformation. Our strategy follows the market movement. You can see here that our mobile bank is from 2010. But in 2016, we started a very strong movement to a full digital transformation. What's the impact from this transformation that we are passing in our distribution channels? You can see here a strong. Let's try to come back. Okay. We can see here that the numbers from the last September, where we can see that there is a very strong migration from physical to digital channels. Well, what we learned, what we discovered during these last years, we discovered that move to digital is more than to have a new type of channel, a new type of technology, or a new product. We need to change our way of thinking. We need to think in a digital way. Banrisul discovered that a traditional bank faces a special challenge when talk about digital transformation. We need to answer the question, what is a digital bank? That's the problem that we faced. Banrisul answered this question based on the level of relationship with the digital relationship with our customers. Here we can see 5 levels of this digital relationship. Traditional, basic online, remote service, digital connected, and digital. We believe that we are in some point near here, and we expected that in the next years we will go to the digital, the full digital transformation.
Yeah, you are going to digital transformation. You talk about the material digital relationship. This is the problem. we talk about the maturity, the digital comprehension among the areas must be involved to go to the next step. Even though you are preparing the deploy application in a digital ecosystem, we have traditional process. When you saw that in the past panel, in the past slide that Ivo showed, the digital, Banrisul Digital, it's completely digital. The application that you have, that you give to our clients, but in the back office, it's completely traditional, the process. So we have to change this. And to do this transformation, a traditional bank must deal with some particular challenges. Here you can see developing a non-traditional skills in a bank like a CX, UX, UI design, create an agile organization, meet the needs of a very complex institution with the different kinds of business. We will talk about retail bank, corporate, credit card, payments, association companies, and adopt a two-speed models, digital transformation and evolution of traditional technology. Banrisul, the average age of our clients is around 51 years old. If you see the longevity and the advance of medicine, certainly the people will live more around 40, 85 years old. Okay, if you have 50, 51, you live more 35, 40 years old. So these people, this client, use this kind of traditional bank. But in 40 years, you need to have another kind of bank for the new generation that is approaching. So for this reason, have to have these two kinds of bank to develop. Typical banks adopt three kinds of digital archetypes. One is a multi-channel. It's similar like you talk about, digitalization on the client's interface. The second one is end-to-end digitalization to end the journey focuses on the client experience and best time to market and transformation organization culture. And the last one is separation of digital platforms. They create a new 100 digital platforms separated from the traditional bank. Banrisul is in the first one, this one. Okay, but you have to move to the second. So this is our project during this year, 2007, 2018, to change Banrisul to end-to-end journey. And you structure a digital transformation program, a strong transformation program based on 7 fundamental pillars with the support of McKinsey. And this pillars, you talk about behavioral organizational changes, innovation stimulus, training and communication, team and personal incentives, value proposition focus on customers' needs, deeper customers, technology, and operation model focus on client needs on omni-channel. And the first structure visited in the bank was the IT and IT governance. This is the scenario of our IT today. You have 3 different, in the IT directory, you have 4 units for departments: security information, IT infrastructure, IT governance, and system development. And you review the operation structure, reviewing the IT core and functions, the process redefined to support digital transformation, support involve the legacy systems, and adoption lean IT and DevOps practices. Not only DevOps, but DevSecOps, because you have a very strong unit oriented for information security. With change, we start this new unit, a digital transformation unit, to support a digital transformation and build a new bank. This is the ability to influence other areas, the bank, and orchestration a digital ecosystem. Interesting to tell you that is the first unit that I'm joining people from the business areas. I changed the people that was responsible for the system unit to here, and the manager of this area is the people that came from business area, from the commercial area. So I have here in IT people from business and people from IT. And you start to prioritize clients onboarding and digital collection. You define it two projects to do: credit loans collection and open checking account. Why? Because the first, the impact the bank results, experience of client, and the ease of implementation. And the results, the benefits, is to the first in the checking account, reduce the time 40 minutes to 5 or 10 minutes, and take advantage of the account opening, intensify the relationship with the products, and improve experience with the client, start the relationship with the clients. In the credit loans digital collection, it was done in mobile, offer quick user experience, and mediating reduction of loss. Okay, but not only theory. The results that you receive with this implementation, we talk about the IT domains, ordering the IT structures, attending the business, terms, insurance, IT business proximity. You have this ordering 160 systems skill to 6 IT domains. Here you had on the past more with this 160 systems, more than almost 1,000 legacy to implementation in our system, in our department of developer systems. You change complete this. Value generation. Intensified allocation people where the value generation for the business. 20-25% of IT hours freed. The increased transparency. Promotion of great transparency and identification communication between business and technology. We develop a dashboard support management. Process improvement. Increase efficiency and technology management to reduce dependency on research. You implement agile model, integrating business and IT. And the evolution capabilities, develop a technical capabilities and technological evolution platforms. 30% productive gain with approval and testing. Okay, as I told you, it's not just theory. What we have obtained in the end of this year, change in the relationship between IT and business, change the decision-making process, and the strategy prioritizing the business. Okay, in the future steps. We are thinking to change as well our branch. Why not to define a cozy bar, a cafe bar, to redefine and to redesign completely the branch? Okay, maybe it could be a good idea. You are prioritizing this kind of thing, and to modernizing the bank tellers as well, to have bank tellers more modern. And the third, you still remember the third archetype when you talk about the 100% banking digital. We're starting this discussion based on 3 fundamental pillars. Improve the protect the customer base, attract the new customers, to improve the gain with the current customers, develop a lever to enable the consumptions of banking services remotely, and talking to the next step, digital transformation. The Banrisul image, highlight the Banrisul image in the market. We are talking about this, we are thinking that to do the next step, 2019, 2020, 21 maybe. Okay, new opportunities to stimulate innovation. This is the thing that you are doing. It's not completely, it's not finished completely at the moment, but you start a corporate venture fund for fintechs, which realize strategic investment required by SU meet innovate strategy. You already want with this is the for corporation, financial return is strategic addition to business, getting involved with emerging technologies, and the fintechs, capital business expertise and leverage of its growth. What is our intention is to have a fund with fintechs, maybe 7, 8, 10 fintechs, and the results of the development done by fintechs must be aligned with the interests of the bank. Okay, it's good for fintechs. It's good for the bank.
Well, why this strategy of Bansu, of thinking like a fintech and investing in fintech, is a well-succeeded strategy? Because Brazil, like many countries, is a fintech paradise. Pay attention to this animation that will show the fintech's evolution in Brazil, 2015. The number of fintechs. Well, we'll not repeat because there is no time. No? But here you can see, you can have an overview from 2018. You can see that until September, we have an increase of 18% in the number of fintechs. Inside of this 18%, we have 86% in cryptocurrency, 55% in exchange, and 37% in insurance. That's an overview from fintechs in Brazil.
Okay. Other actions that you have done is to working with Febraban, with the project with Febraban, with other banks in Brazil. Here you have a working group oriented for blockchain. We are discussing the effects of DLT technology in the financial sector. This is all the banks that work together. We have a lot of projects in Febraban with the banks. Another project is a P2P network. It's a network proposed to create a permissioned blockchain network for decentralized and secure settlement of operation. We call there SFD, in Portuguese SFD, in English Digital Financial System. This is a network with spontaneous adherence of financial institution, spontaneous adhesion of client, operates 24/7 days, 7 hours, 7 days a week. Private communication network of the internet, share client database, email and phone only, similar like WhatsApp. No sync points of failure, code share between financial institutions, trust the authentication need mobile bank operation, and support with funds from the financial reserve. This is a project done by 5 banks in Brazil. I can talk a little bit more later. I show a little bit more about this project. But this project at this moment is with a regulation for central bank. Is not complete launched to the market. Okay, this is a little bit about 90 years old, an old young bank. Think or trying to think like a fintech because it's very important, necessary for our market. And you are talking about a state, a regional bank, a public bank, it's not a private bank in south of Brazil that have to be with the great banks, or the big banks in Brazil, doing the same and offer the same product or sometimes better products for our clients with the difficulty to be a public bank. And okay, and think like a fintech. Okay, thank you.
All right, and if you can stay until the panel at the end of the day, by the way, they will show something that I've seen actually when I was in Brazil that should kind of blow your mind. So again, a lot of activity down there. The next item on the agenda, actually, there will be no presentation. We're just going to chat, and I think that's just because of the quality of the speaker and the scope of his knowledge and experience across so many industries that touch payment and do money movement, I will call that, just enticed to do just a chat, like among friends. I've known actually Monkey for quite some time now. So we're just going to have a little conversation about what's going on. And if you want to ask questions, you can't wait for the panel. That will be the good time to raise your hands. But it's my pleasure to welcome my great friend Monkey Wu, who is now Senior Vice President of Digital Banking at BPC. Hold on, I was not even finished with his resume. That was just the title number one, right? He's also a visiting assistant professor at the Pratt Institute in design management, nothing to do with payment, but I guess the user experience and user interface is quite important when you want to do that. He was also executive VP at MasterCard, and prior to that, he worked actually for Orange, doing the payment for the telco industry. And I'm just going to cut it short because the list is so long. So Monkey, if you want to do a quick intro and give a bit of your perspective, and then I will ask you the tough questions.
Absolutely. Thank you very much, Sébastien. So I like to make this session super interactive. Yes, it's right after lunch. We are all tired. Maybe you came from a very far away place. So what I would like to do, so we have 20 minutes together. What I would like to do is to give you a quick overview of what it is that we are doing at BPC in the digital space. And I sincerely hope that you're going to have plenty of questions so that we can really enter into a dialogue. So as Sébastien was saying, I came back from 7 years in the US last year, and I joined the digital team of BPC. So what is BPC? We are one of the largest French banks. We operate on the two main brands in France for retail banking, which are Banque Populaire and Caisse d'Épargne. We also own an international commercial and investment bank called Natixis. And together, we form, in fact, the 20th largest bank by asset size in the world. We employ more than 100,000 people, and we did last year something like 23 billion euros. About 2 years ago, the group decided to considerably expand, accelerate, amplify its digital transformation. And the group decided to create a dedicated digital team, reporting directly to the CEO. So, you know, to do digital, you have obviously several models. What we decided was to create a new entity which would not report into IT and would not also report into the normal business functions, marketing and sales, and etc. Yes. Our idea is that for digital, you really need something which is a little bit of a mixture between technology skills, but also business skills. Yes. So if you know, it's going to be a little bit of a caricature, but the IT people, often, they just are waiting for instructions. They are saying, okay, business has to tell me what they want, and I will provide responses. And on the other side, business often, not often, sometimes, they are focused on new products, revenue generation, and things of that nature. What we need for digital is something a little bit different. We need this combination of business skills and technology skills, and we need also a very strong focus on the customer experience. And customer experience is something which is very difficult, And it's not directly related to new revenue generation. It's also not directly related to delivering projects. Yeah. So we decided about 2 years ago to create this dedicated digital entity. And what is it that we've done since then? So we have put in place, very similar to what my colleague at the Brazilian bank was saying. We put in place all of this agile transformation, getting the business teams to work very closely with the IT teams and so on. And over the last 18 months, what we've done is basically really focus on 3 business KPIs. The first business KPI is to get more of our customers to use digital channels. So just to give you a sense, in France, in terms of retail banking, we have approximately 30 million customers. But quite a lot of these 30 million customers are inactive in the sense that they have just one product, yes, and they don't do that much with us. Out of the 30 million, we have really 15 who we consider as being active customers. Out of these 15, today, 9 million use, and that's about 60-65%, 9 million of these customers use our digital channels, meaning the website and the mobile apps. And out of the 9 million, 4 million use the mobile app. And of course, you will not be surprised when I tell you that the 4 million, these are the most active, the customers who are really going to be very loyal to the bank. So that's what we want to do. Our first business KPI is to increase the proportion of our customers who are going to be digital users. The second KPI that we're targeting is really the customer experience. Something that I've been really stressing. We want to make sure that all of our services will be easy to use, will be attractive, will be at the same level as the native digital players, yes? And for that, as I'm sure quite a lot of other banks are doing, we are using the Net Promoter Score. The advantage of the Net Promoter Score is that it's a very generic indicator, which also gives you a comparison. It gives you a comparison with regard to your competitors, but also gives you a comparison compared to other industry sectors. So that's the second objective. And then the third objective, of course, is to move more and more of our services towards the digital channels, and in particular, move more and more of the different sales transactions, also opening new accounts, having customers subscribe to additional services. We want more and more of these transactions to be done directly on the digital channels. Now, just to give you an overview of the results, and then I would like to stop, and hopefully you're going to have plenty of questions. Over the last 18 months, our key focus, where we've spent the great majority of our effort, is really the mobile applications. Yes. So we have spent considerable time to, first of all, considerably simplify the experience. So the screens have been completely revamped. We have simplified the menus. So sometimes we had menus with like 35 choices. This has been massively reduced. We have completely redesigned a number of services to make sure that it's very easy. The customers understand that you go from step 1 to step 2 to step 3 in a very easy manner. We spent also a lot of time on the performance of the mobile applications. People expect that the mobile applications will work very fast. So we spent considerable time doing this. We've added more and more features which enable the customers to be completely autonomous. So we've created, for example, features which enable the customers to manage their payment cards, their limits, to report their cards lost and stolen. We were also the first bank in France to introduce instant payment, and instant payment is now directly available in the mobile applications. So that's what we've done over the last 18 months. And now we want to, of course, continue improving the mobile apps. We will expand into improving our websites. We also want to spend now more effort on simplification of some of our back-end processes, Because if you don't change your back-end processes, you can, of course, improve your front-end, but only to a certain limit. So we're going to spend more time on doing front-to-back optimizations. And then, of course, we want to create more personalized experiences, exploiting big data and artificial intelligence. So that's what I wanted to share with you as a general introduction. There are several microphones, and your turn.
And if everyone is very shy, I have so many questions. All right. Yeah, go ahead.
No, not a digital bank, a digital department.
And do all the services you referenced, are they provided through that department?
Yes.
So
Yes.
Say something about the conflict or living with legacy systems and legacy databases and how to package that data and make it available through the digital channel. Anything about the challenges you may have faced doing that. Right? And also the whole idea of platform economy, platform ecosystem as far as an existing bank that wants to digitalize the services, how that may work or doesn't work for an incumbent like your bank.
Has anyone heard the question or no?
So your question was around, we have the front end, then we have the legacy. How do we connect the front end to the legacy?
Yeah, but
Yes.
I wanted to hear your view
On platforms, bank as a platform.
Correct.
Right.
And whether
And open banking.
a role for that for an incumbent like your bank.
Right. So you have actually two questions, which are two great questions, by the way.
And you need to make very short answers.
So with regard to the first question, which is front-end and legacy, we are building, in fact, a new middleware layer. Yes. So we have built, and we continue to build a middleware layer which connects to legacy and provides modern APIs to our front-end. Yes. So we are not completely there yet, but the idea is that with this middleware layer, the front-end will only talk to the legacy indirectly and through a modern API layer, and therefore the front-end will be able to evolve very, very quickly. So that's the first question. Now your question about open banking and bank as a platform. So here, I think that we have so much work to do. The main idea about bank as a platform, in my mind, is that you can integrate services into your offering coming from external players. Yes. The reality is that for a large bank like us, we already have hundreds of internal services. Yes. So before opening to external services, we have so much opportunity with our internal services. So I would say this is really where we're focused at the moment, which is to facilitate the integration of our internal services. We have a few projects. For example, we are currently deploying the service of a partner startup. But I would say at the moment, our focus is more on the internal integration of our different services.
I think there was one more question over there. That's going to be the last one we take. And then if you stay for the panel until the end of the day, you will be able to ask more questions. And trust me, I have a lot of questions right now.
I think you've just touched on it, but I was going to ask around to what extent you are using third parties to deliver a lot of this change versus building in-house.
So we have systematically a build versus buy approach, okay? And in a number of cases, we are using third-party suppliers. So for example, part of this middleware layer is actually going to be provided by a company called Miniga, which is headquartered in Iceland, okay? So Miniga is not going to provide the entirety of the middleware platform, but we are actually getting a third-party software solution.
And can you deliver everything you need to quickly enough? That's obviously always a challenge for banks when they build in-house versus versus
So,
insourcing?
I think that there are several parameters to take into account. You know, when you listen to external vendors, they will say, we have something which is off the shelf, you know, it's so much easier, etc. The reality is that yes, it is true, but then when you bring it into the bank, even if it's SaaS, whatever, there is this integration layer which is necessary. And the time and the cost, in theory, you've saved by using an external solution sometimes gets eaten by this integration layer. So I think that there isn't a sort of a systematic answer which is always correct. Depending on the case, depending on the case, it will make more sense to do it in-house, or it will make more sense to use an external supplier. So we want to be super pragmatic. In a number of cases, we are already using external vendors. And then for a big bank like us, we have also a question of scale. We deal, I told you, with billions and millions. You know, we have 30 million customers. Often, those external suppliers, particularly the small ones, they in fact have never dealt with millions of customers. Yes, they have solutions which are okay up to a few 100,000. But then when you take it to several million, there's considerable work which is required.
All right, and I think we're going to wrap up that session right now so we kind of get back on track. Again, keep your questions for later. Monkey will be back on the panel. Actually, based on his talk, I have probably like 7 more questions I want to ask him, so I'll get there. I think we have to shuffle a little bit the agenda due to airplane delays. So the next speaker is going to be actually Daniel Kornitzer from PaySafe. And the topic he's going to talk about is the promise in digital payments. So very quickly, so Daniel is the EVP and Chief Business Development Officer at PaySafe. He's responsible for everything that's developing a strategic partnership for PaySafe, so going back to third-party and partners, but also a key decision maker in the merger and acquisition activity. So I think what is going to be interesting is behind talking about the technology, it's also, again, it shows that in the world of fintech or financial services or whatever, you can't really do it alone. Even if you're the incumbent, you're the bank, you need to work with other entities. And if you're the small fintech startups, you need to also understand the need of the bigger player and who you make an alliance with. So I will turn it to you. Thank you.
Thank you, Seb, and it's great to be here. I hope I'm going to get this right. So I'm going to try and talk about what I call the promise of technology. I'm an engineer by training, and I love technology, but it's never technology for technology's sake. It's always technology trying to deliver value to consumers, to merchants. So I guess the first point would be to try and quickly go through the evolution of the industry and how we got to where we are. Then get into the forces that are driving innovation in our industry, in digital payments. We talked about the promise of technology. What does it mean to consumers? What does it mean to merchants? And in the context of the changing... maybe another... I think there's another mic that's open. Two mics open. Yeah, I think we have 2 mics open. So this is when technology goes wrong. What happens? But no, seriously, the model of engagement is changing. I was talking to the CTO of BBVA at Money 2020 in Singapore. And out of 200 interactions that the average consumer does with the bank, only 4 happen at the branch. The other 196 happen over technology. And that's a bit of an indication of where things are going. They call it brick to glass to AR, where glass is smartphone and laptop and AR is contactless, tap to pay. But that's the world we're in. And the question is really, how do we deliver value in that environment? So going back to the beginning of the internet, Web 2.0 was really a one-way highway where information was flowing from the publishers to the viewers. And even though it was extremely limited, it was enough to radically alter entire industries, like Yellow Pages or media, catalog sales, etc. And then came, I guess, e-commerce. I still have a copy of the New York Times article entitled "The Internet is Open," August '94. That was the very first SSL encrypted transaction. Some guy in Philadelphia bought a CD, and that was the very first transaction. Then, of course, came Web 2.0, where the consumer stopped being just a spectator and became an actor. So by starting to rate anything that could be rated, my daughter was taking classes and checked on the ratings of the teachers before picking which class. People do that for doctors. Of course, TripAdvisor has something like 700 million reviews of restaurants, hotels, and the like. About 8 million venues are reviewed. So it's a massive tool, of course, Wikipedia and ratings of repairmen and the like. But I think what's critical here, if we look at sort of the evolution of technology and social, mobile, and now Internet of Things, artificial intelligence, blockchain, etc., is the pace of change, right? If we had a chart here that showed how long it took for the first 50 million users. So if we look back in time, phone, radio, TV, internet, Facebook, the first one took 78 years. I think the phone, it took 78 years to have the first 50 million users. The last one, probably under 10 years. So the pace of change is increasing at an incredible rate. And that's just the technology axis, but look at what else is going on in our world that's also tremendously impacting our environment. Think about the urbanization, right? If we go back to 1950, 70% of the world's population was rural. Only 30% was urban. Now, fast forward to 2050, and it's going to be the exact opposite. 70% urban, 30% rural. That's a massive change. Just another example that I think is mind-boggling is the rise of Asia Pacific and China and India in particular. I think that the world has never seen an explosion in the economy of any country as steep and quick as China's. 1960, China's GDP was $60 billion. Today is 12 trillion. That's 200 times in constant dollars. That's incredible. And I think that China is also a petri dish for innovation. If you look at the amount of mobile payments, $15.4 trillion in payments. And of course, that includes QR code, point of sale purchases with Alipay and WeChat Pay. But even looking at traditional mobile commerce, that's $1 trillion. 75% of all online or e-commerce transactions in China are mobile. It's just, way ahead of any other region and country in the world. So if I look at the forces that are driving innovation, I can think of three main, at the confluence of three main areas. Technology, we've talked about, regulation with things like GDPR and PSD2, and last but not least, the consumer. Customers are driving innovation. It's been said that people my age are more likely to divorce than to change banks. Now I tell you, my kids are going to change banks if those banks fail to live up to the expectations they have of them. So the consumer is changing, and the last experience becomes our next expectation. So that bar keeps going up and up, and I think the consumer is playing a great role in driving that innovation. So, well, it's been said before, of course, start with the consumer first and work your way back into technology. And that's what any company needs to do. I can think of no less than 6 areas or half a dozen areas in technology that are dramatically changing our world, from big data, machine learning, and artificial intelligence, biometrics, Internet of Things, quantum computing, blockchain, and distributed ledger systems, and cloud services. Patrick Gauthier was speaking this morning on the keynote about Alexa and conversational commerce. And that's an example of an area. I mean, last year in the US, 8% of people use smart speakers, conversational commerce or banking. And that's great. The research points to that number quadrupling to 31% within 5 years. But at the same time, we did some proprietary market research, and fully 2/3 of consumers have concerns with the use of conversational commerce, or banking. What if I think I'm going to be charged 14 euros, and in fact I'm charged 17? What if I'm signed up to a subscription that I didn't mean to subscribe? So consumers are concerned, and whether those concerns are real or perceived, I think it's important for companies to be aware and to find ways to reassure consumers. A good example would be Amazon Go, the stores. I was in Seattle in March, and I went to the Amazon Go store. And of course, being an engineer, I tried to fool the system, take 3 chocolate bars, put back 1, see if in the end the bill was right. So everything worked perfectly. I couldn't fool the cameras and all the sensors they had and the facial recognition that they had. But most interestingly, Amazon does something very well, which is 2 minutes after you walk out of the store, you get the bill, basically. And they make it very easy to challenge it, because no one wants to be on the phone saying, no, you charged me for 3 chocolate bars, I only took 2. You can just swipe the item on your bill that you get on your phone, and you can challenge it. Now, of course, if I do it with every single purchase I do, they're going to ask me to go and shop at Walmart. But if for the occasional discrepancy, they make it super easy to, and that builds confidence, because next time I go, I'm not going to be worried, what if the bill is wrong? I don't want to get on the phone and argue with them. So I think that's a quote that I like in particular. If you don't like change, you're going to like irrelevance even less. Look for the right technologies and apply it where it matters. But change is the only constant, really. And one area that technology can be used for is financial inclusion. If you look at the world, there is something like $2 billion that are currently not being served by any financial services. And it's not just sub-Saharan Africa. In the States, there is between 15 and 60 million people that are either unbanked or underbanked. So it's a real concern. AI, I believe, is the new electricity. And much in the same way that electricity changed every industry 100 years ago, I think AI is in the process of changing every single industry, as we know. And we also have the confluence with what I call the age of the consumer or the customer, where everything is measured by that satisfaction and that bar that keeps going high. But I think that what's interesting is Professor Ang, that I have here in my slide, at Stanford, says that a brick-and-mortar company with a website is not an internet company. And an internet company with a neural network is not an AI company, meaning that there is something fundamental about being an AI company. That means you have to structure yourself to take advantage of those technologies. And we'll get into details as to what that means, really. So when I translate technology into what I call the promise of technology, I try to find areas of value that really speak to the consumer and in very concrete terms. So I selected four examples of that promise. The first I call the convenience with security. In other words, if you can combine a frictionless experience for the consumer, but at the same time make it bulletproof from a security perspective using biometry, behavioral analysis, and machine learning, then you really have a great environment for consumers. The second one is what I call mass personalization. And yeah, we may be able to pick the colors of M&Ms, but the reality is that with the advent of the Amazons and the Walmarts and the Costcos, which, by the way, have brought great efficiency in the distribution of goods and services, we've lost the relationship that consumers used to have with mom and pop shops, where you knew the owner of a restaurant, and the owner of a restaurant knew, the chef knew what kind of meals you like, or the owner of the clothing store would know that you like blue shirts with a certain stripe. Today, unfortunately, many consumers have become numbers, and really no one wants to be a number. I believe that AI has the promise of bringing mass customization to the level where every customer is going to feel valued, appreciated, and again, not a number. The other one I call automation with control. So the conundrum here is that if you automate all the transactions, you lose control. So the ideal environment would be, so I have a house in South Florida, and I get a bill from the electricity company every month. Now imagine if I could set a smart contract with my bank that said, if the bill comes in anywhere between $50 and $120, paid, I don't need to see it, just fully automate that. If it's below $50, I want to see it because maybe my air conditioning broke and I need to call a repairman. If it's over $120, I also want to see it because maybe someone left all the lights on and my bill is $300. So the key here is 98% of the transactions will be automated, but the 2% that constitutes anomalies or exceptions will come to me. I call it the best of both worlds. And the last example is the value of technology in terms of a gain in speed, a gain in performance, and a lowering of cost, I think is significant. One area that I guess was presented this morning during the stream that talked about digital identity, that's an area that's ripe for disruption, and new technologies from AI to blockchain can be used to increase the speed, lower the cost, and create an environment where through federated trust networks where the likelihood of a breach becomes almost reduced to zero. Our data as a consumer are with banks, with processors, with telcos, with credit bureaus. The hotel here yesterday in Cannes took a photocopy of my passport. The hotel in Singapore in March, scanned it. So I have my data floating around. Every time my data is in a new place, it's a breach waiting to happen. And I think technology, will play a big role in disrupting that in a very positive way. Another area would be risk management through, machine learning, a great way to reduce fraud significantly. So data has a better idea. So what does it mean for a business to take advantage of AI? How can we structure ourselves? I put down some points which I think are significant. Bring the decision-making down from the CEO into the people that are closest to the customer, to the engineers and the product managers. Strategic data collection. So create an MVP, a product that you can bring to market quickly, gather data, iterate until you have a product that's second to none. That's the right way to do it. Make sure all your data is stored in a single data warehouse, because that's the only way you're going to get a full correlation and a full cross-sectional view of all your touch points with the customer. So if I deal with a bank and the bank has siloed databases, so my mortgage is here and my car loan is here and my investments are here and my insurance is here, that bank will never get a cross view of me as a customer. So it's not going to be able to serve me well. And AI companies have a pervasive drive to automate, and they do it very well. And something that some people do not understand, AI changes the roles and changes the ways in which we do things. I've been a product manager for many years, and the way we used to spec, say, if I were to create a Facebook, right? I would create a wireframe or some sort of a mock-up. I would say the buttons have to be here, etc. Now, how do I spec a product that's a self-driving car? There are no buttons. It's not so much the UI that I'm specing. It's more of a probabilistic spec, right? Based on a set of video inputs collected by the cameras in the car, can I be 99.999% certain that the car is not going to, have a collision with an object or even worse, a pedestrian? That's the way that an AI product will be spec'd. It's very different from the old way of doing things. And what does it mean for consumers? Obviously, as consumers, we benefit from if AI can deliver customization, speed, coolness, security, of course we benefit. And I guess the other point is, for those of us that have children, is to try and guide them to careers that are not going to be automated and that are going to grow in this new world. So we talked about the new customer engagement model, the 200 interactions, only 4 at the bank. So how do we engender loyalty? in this new way of engaging with customers? And the answer is that we need to create products that are fit for market. And I think also we need to understand the customer's higher purpose. I'll go back to it in terms of what it means. I'll give you some examples of how we do that at PaySafe. And obviously, the opportunities are for those that can navigate those waters of change and take advantage of technology. Again, BBVA talks about 3 keys to delivering value: solving a need, giving back time, and reducing stress for the consumer. Sounds, motherhood, but that's the only way to deliver value. Change as the only constant. And what do I mean by understanding the higher purpose? So let's say that I buy a gym membership. So the physical product that I'm buying is access to the machines and to the facilities. The logical product that I'm buying is the opportunity to exercise or to sign up for classes. But the emotional product that I'm buying is my desire to get in shape, to lose weight, to feel in control of my life. So unless you understand the physical, logical, and emotional dimensions of a product, then you're not in a position to delight customers and to create value. So we try to do that, and the key is obviously iteration, customer involvement and iteration. Wash and rinse again and again until you're satisfied with the product and you get the right type of feedback. We do that for our mobile ordering application, as an example, where every month we actually hire people that come in and interact with the latest version of the product that hasn't yet been published or productized. So we watch them operate and see how they interact with the product. We get their feedback. And every month we repeat that with a group of 20, 30 people. So the key is iterate, refine until you're happy with the end result. In our industry, I think that the best payments are transparent. And that's true of consumers. And that's one of the reasons why people love Uber. There is no change. You walk out of the car, you have to worry about tip and getting a receipt or anything. You integrate into an app, a piece of software, a platform, and the payments come along for the ride. And that's really a trend that we're seeing more and more. Merchants don't want to become payment experts. They don't want to become risk experts. They just want to take advantage of the product and concentrate on their core business. So a couple of examples where we apply what we're preaching here. One is our mobile ordering platform called Golo for Go Local. So we create a curated virtual marketplace around any property, an airport where we can deliver to the gate, food, duty-free, etc., a hotel where it's like a concierge, and in-venue, office towers, etc. The second one is cash, weaving cash into the fabric of digital payments. So for financial inclusion, allow people that don't have perhaps a bank account or a credit card to be able to buy with cash and go to a convenience store, gas station, post office and pay either before or after the purchase. The third one is pay later or credit, where we do it online or in store, where we've taken a process that used to take 20 minutes plus, and we've translated that into a 2-minute process where the consumer can walk into a store, wants to buy a bike, within 2 minutes gets approved, walks away with a bike, merchant is happy, consumer is happy as well. Last but not least is the integration into platforms, what we call integrated software vendors or ISVs, and making payments something that's 100% integrated and seamless for the merchants. So that's pretty much it. Thank you very much. Hope I didn't exceed the time.
All right, thank you, Daniel. Again, apology to the room for the little mic mix-up. That's what happened when you walk too fast. Daniel, sorry for the interference. We also got to know that you are banned from the Amazon Go store in Seattle for trying to break the system. And I want your electrical bill. That was a very nice one. Our next speaker actually finally landed as a very particular profile, actually. Not someone you would expect to see in the world of fintech or finance or whatever. Jeremy Rossi is actually, his background is engineer in telecom, so I'm going to have to switch back and forth. Has been involved with M&A between London and Paris. He has an MBA from the University of Chicago Thunderbirds. No, the other one? Oh, sorry. Did a boo-boo there. And his background or some of the big achievement he has done were to launch Burger King in France, Croatia, and Israel. That is not your typical fintech guy. Now he's been with N26 for the past 2 years. They have 500,000 clients in France, about 1.5 million in Europe, and he's going to give us his perspective on how the new players are bridging the banking to the new needs. So, Jeremy, welcome.
Hi everyone. So who knows N26 here? Whoa, okay. That's normal, that's the environment. So yeah, I think what we want to do is basically showing how we're bridging the past, so basically explaining what's the current situation, because I think like everybody here like experienced like the old traditional retail bank, but also how we are solving problems and reaching out to customers like in a new digital way. So all the people here like are experiencing what we call disruption. I think we all knew before what it was to buy a DVD, or how to find a taxi, how to buy a CD, and how at some point like things were disrupted with these new tech companies, and things were like much easier. In the same way, there was like still like one industry that like didn't like that was ripe for disruption, but didn't face it. Like it was like obviously banking. We all knew that banking is pretty much outdated, right? So the remaining one was like banking, and I think there's like some reason why it took like much longer than all the other industries. The very first one is it's very capital intensive. So we all know that whatever you do in the banking industry like requires a lot of money, and not just like, we're not talking about launching a startup. It's really millions of dollars. The second one is complexity. We're not just trying to discuss and like match like the customer expectation. There's like a whole set of regulation, whole sets of process to comply with, a whole set of partners to integrate. So it's not that easy. The third point is obviously regulation and licenses. Just to give you a sense, there is very limited number of banks that managed to get a license over the last decades in Europe. Even us, N26, and we are really known to be really fast. It took us 9 months. So it's not just like you apply and that's it. Like we even like some competitors, they even like don't get it yet. So it takes a lot of time. And the last but not least, and I think that's obviously like the main topic of the event, is obviously trust. When you're a bank, you need to build trust about as a bank. So it's not just like you're building an app and like you're gonna store some pictures. Like people will like trust you with the money. So for a traditional bank, it takes hundreds of years. Like they say, hey, we've been there for 150 years. As a new player, you have to find some other ways. Like the other way we are finding at N26 is basically the referral. Basically, you're trusting more your friend than like an ad. And this is where we're coming from. So where did it start? I never thought I would actually say that, but like the pioneer or like PayPal was like really like the very first one to really start to disrupt the industry. They were the first one to try to unbundle the existing monopoly. They were the very first one that would say, let's try to be like to change like the paradigm, but also this is where like the key thing that they built is trust. Like they were like the very first one to be like a third party trusted, and this is what they managed, and this is why like they succeeded. Also, it was the beginning, but like it really ramped up like over the last few years. When you look at like the numbers, and like I was even like surprised how little was numbers. How little was numbers in even back in 2008, where like the technology was there, but still like the investment was not there, which was crazy. Like when you look at now, like a whopping like 16 billion investment. Actually, I'm looking forward to see the number for 2018, where I'm pretty sure it's going to be like even more massive. So like you see, like when you get this kind of massive investment, it's clear that also there will be some return. And also, as you can see, and I didn't put like all the unicorns. It's just some example of the unicorns that like that are just arose like in the very few years. you can see that not only like there's many of them, but also that they are all over the world. So we're moving away from like a very monopoly industry where you have like some big payment institution and schemes, where now you have like lots of players are unbundling and actually like trying to have also like a global reach. So you have like every time like from all over the world we see some new players that can reach like the rest of the world. Also what we're seeing, and that I mean I can put like pretty much like any bank, is like really like you can see like two paths. There's the path of the existing banks. They are like waiting for the interest rate to go up. I'm still waiting for it. But like didn't reinvent the model, still like based on the old model, like there is nothing new. And you have like some new players, like I'm putting PayPal, but like actually would be even more massive if I put like any like even younger tech companies. But you can see like now they're creating like new products. They have like new opportunities, and this is where like it's really reflected in the share price. And like if you look at like a longer period, you would be like it would even more impressive. So let's get back to the problem. I think all of us here, and me included, except for in 26, people have lost like trust in their bank. Like when like now a bank is a commodity, and the commodities that you need to have. Nobody wakes up in the morning and say, hey, I want to go to my bank, or this is like I trust them on their decision. Like most of the people, they really lost their trust like in their bank. And this is clear all over the world, not just in Europe. But there is some reason for that. Basically, like long or short, retail banking is outdated. Like it hasn't changed for decades. Like the traditional bank you see today is the same as like maybe in the 90s. Like the design is really back from the 90s in most of the area. I'm not just talking about digital. I'm talking about the whole user experience. The technology didn't change. I guess you guys are here for that. But like in general, like it's pretty much like hard to change, and obviously it's high cost. And the cost, they are reflecting that on the customer. So this is like the existing setup of the traditional bank. So now, and the conclusion of that, I mean, I would love this stat, is basically like 7 out of 10 millennials, they'd rather go to the dentist to the bank. So you can imagine what is the user experience for a millennial, and I include myself in the millennial, but obviously I think everybody here, like you don't like to wake up on a Saturday morning to see your banker. This is not something like people enjoy as an experience. Right, so how is N26 bridging that and getting back to the customer? We're seeing the future of bank, but I think it's real. Now we have like 1.5 million customers, so actually it's the bank of today now. First, you need, as a tech company or as a startup, you need to have like a strong vision. One of the key points here is like really to put back like the customer and making sure they love like their product. Like it's getting away from being a commodity, but really like as a service, and like you want to love your service. Like the same way you love Netflix, the same way you love Spotify, we want you to love also N26 as a bank. Then there's like a simple, like the promise has to be simple, like even as a tech company. Hey, you need to change paradigm. So when we say like building a bank that like people love is something new. I mean, like in general, is like the bank is supposed to support you or something like that. Bringing back like this topic is like something that is really simple but really new. Second thing is basically we want to bring back like the best digital experience. So using what is available now with the new technical tools, so that like as a user experience, what customers are having like in other industries, they can also have that in the banking. And last but not least, the pricing. I think like one reason why customers are losing trust is because of the lack of transparency. I think it was one of the topics also of the previous presentation. People don't like to pay when they don't know what they are paying for. They are ready to pay, but they want to know what they're paying for. To do that, obviously N26 or new players, they have some strong competitive edge. The very first one is no IT legacy. Obviously, it's much easier to build like a new bank when you don't have like legacy from the 90s, when you don't even find like the right engineer to code your existing database. So it's much easier, the same as for telecom, when like for example in the emerging countries it was much easier to launch mobile phone than like in the old traditional world. The second topic is the scalable organization. we have no branch. So for us, launching a new country is much easier. We don't have to go in a brick and mortar and build branch one after the other. Right now, we are capable to launch countries in a very few weeks. And when I say that, I really mean it. Like we launched like 4 countries over the last months or something. That's even for us, it's even hard to track like how many countries we're capable to launch. Which is my next point is all right. Oh, no, it's coming back. Cool. Banking with the borders. Obviously, it was made easier in Europe because we have this European legislation that makes it possible for us to reach out like the whole market. But even though now we announced that we're going to go in the US next year, it's also easier for one player to use the same tools like across like different regions, which was not done by any traditional bank before. Even if they are claiming it, they are claiming it. And last but not least, the lower cost of acquisition. Because if you manage to make a bank that people really love to use, then like it goes like word to mouth. So people are referring to their friend, and you don't have like to pay hundreds of euros to acquire a new customer. So this makes it like a very positive circle. So how are we doing that? For those who don't know N26, and even for those who know N26, the very first thing is like we're the very first one to be like a full paperless account. When I say full paperless account, it means that you are capable to open a bank account even on a Sunday without signing any paper. You can be in your sofa Sunday 8 p.m. and you're capable to open a bank account. Second thing is like we want to make sure like you're gonna have like an outstanding mobile experience. When I say outstanding, this is like top notch. Everything is seamless, transparent, super easy to understand. This is what you expect from like any other industry. We're doing it for bank, but like this is the experience, the kind of level of experience that like the top players have across other industries. Just like the middle screen, for instance, this is how you change your overdraft limit, just with one finger. I'm not sure you can do that within your traditional bank. Also, we have reinvented like the debit card tiers. First, as you can see, they are pretty much designed compared to some other players. But other than that, we're redefining what we're putting as a package within the card. So and this is something that we are changing. It's not set in stone. This is something where we're assessing and testing on all our customers. We're doing tests all the time. Trust me, like the package has changed maybe already like 50 times, and it's going to continue to change. Why? Because we want to match the customer expectation here. One more thing, obviously, is like the real-time banking. This is enabled because of the latest technology. When I say real-time banking, I love to do the test. Whenever I retrieve some money at the ATM, I get the notification before I get the card back. So this is real-time, and this is and what is really funny as an anecdote is like all the customers, they get used to that like in maybe 1 or 2 days. And as soon as they don't get the notification within 2 or 3 seconds, they start calling like the customer service. So like in the past, people are used to wait maybe 1 month, 45 days before they get the paper receipt. Now, if they don't get the notification within 2 or 3 seconds, this is already something that has changed. So it's clearly like a customer expectation. Obviously, we're in mobile banking, so mobile banking means mobile payment. I think we're one of the only few players that have like both Apple Pay and Google Pay, obviously depending on the country where it has been launched. But we're one of the only players, and this is like a great demand from the customers. Again, once you get used to that, like there is no way back. One really new thing that we invented, and that is like really new, and like you will not find like in any other player, is like how we managed to get like a real flexible account. Like this is something that we invented and we call spaces, where you are capable like to set your money aside in different pockets. So in traditional bank, you would say, okay, I would open a separate bank account and put some money and wire some money here. Like we did some research and we understood that people really need to visualize where they put the money separately. So this is like separate bank account, but we design it in a way where it's like it's coming from the user, so they understand like pretty smoothly how they do that. And to be clear, this is just how you're moving with your finger some money from one account to another. And this works real time. We're the only one to do that, and we're going to improve that. So not only you're going to be able to set some money aside, but you are capable to put some goals. You are capable to put some automatic rules, and also you're going to be able to share the accounts. Again, complying with the legislation real time in many countries. The idea in general is that you're like within 26, you're just like one finger away or one click away from like any of the financial products. I showed you like some of the basics, but we already have like a full list of like the of products you would expect from a bank. So we're doing credit, we're doing investment, we're doing savings, we even are doing insurance, and everything is smooth. You can do everything in just one click on your mobile phone, 24/7, wherever you are in the world. So how does it translate into numbers? For those who don't know, in 26, we're, I think, in hypergrowth phase now. We have announced like 1.5 million customer recently. Just to give you a sense, also like in France, we announced like 500K customers in just 20 months. I think we're like the fastest growing bank in France as well. We are now live in 22 markets. We just launched the UK last week. We launched like 4 markets like the week before, and we announced that we're going to go in the US in the first part of 2019. So we're also like ramping up the rest of the world. Maybe also to give you like a sense of how many we are, how we can target so many people in so many countries. Actually, we are only like 500. I think now we're growing like more than 50 per month, so it's really hard to track even the number of employees. With only like three offices, one in Berlin, one in Barcelona, and we opened one also like in New York to launch the US because it was easier from like a time zone perspective. And we continue to grow. We will open one in Paris pretty much soon. And also, as we say, it's pretty much capital intensive, but we managed to do that with only like $200 million, which is not even like a digitalization plan of any traditional bank. So this is how we made it, and I think right now, like the growth we have is really driven by like the organic side. So really like people like referring to each other, and this is like a successful business model that matches like customer expectation. All right.
Thank you, Jeremy. I think like we can take maybe one question, or if anyone can wait until we're on the panel, then we'll be back on track from a time point of view. One question, all right. And I'll repeat it if you want.
Yes.
Oh.
Hello. Maybe some missing from the start of your presentation. You have a bank license, yes? You are a bank.
Yes, we're a full-fledged bank in Germany and passport in the rest of Europe, and we're also working for the US.
And you have no branch, you have only digital mobile application?
0 branch.
Yeah, okay, thank you. It's only a little question, thank you.
It's very surprising for the anecdote. Sometimes we have like people showing up at the headquarters thinking that is a branch.
Yes, it's interesting, thank you.
All right, thank you, Jeremy. I think we take more questions during the panel. And going back to one of the points you were making, actually, just for fun, like fun fact, recently I was looking at some job posting for the financial industry, not for me, but just for fun. And you had a bank trying to find someone that was experienced in COBOL programming language, and you had a fintech company trying to find someone that's got experience in JavaScript. Just think about that. And these were published at the same time. COBOL programming, JavaScript. So that's also the big gap that we have to understand and observe. All right, thank you, Jeremy. So now next speaker actually is going to try to explain to us why more people are trying to enjoy their experience at the dentist than with their bank. Let me see, get that right. So Jan Kedley joined Divido in 2018, so very recently. He was mentioning that to me this morning. But prior to that, his experience was mostly with the big networks, American Express and MasterCard. One of the things that's interesting is also his focus was a lot on the customer, on the user side, and now he's also looking on the what we call like the the lender side. The other side of the business is how do you get money to the user. So this perspective is quite unique, and the way of what we need to understand is going to be around like paying in by finance is why every millennial wants in, and how to understand the mindset of the user in today's world. So, Jan, oh, you, sorry, you are right under the projector.
Afternoon. So, Ian Kedsley from Divido. Quick show of hands, who's familiar with Divido? Probably not as many as N26. No, okay, so Divido is we are a software as a service technology platform that connects lenders and banks with retailers in order to provide pay later finance, point of sale finance. So omni-channel, in-store and online. We're live in 10 markets across Europe and North America. We're going about 4 years. We completed our Series A funding round about 4 months ago, and we have about 50 people based out of the UK, Germany, and the US. So today I'm going to speak about point of sale finance. By point of sale finance, we are talking about in-store and online, and millennials. So just in terms of a quick definition, when we're talking about millennials, we are talking about people born between 1980 and 1996. Hands up, anyone in that bracket in the room? Yeah, hopefully. Generation X is somewhere between 1980 and 1960. Any of those in the room? Yeah, I won't ask about baby boomers. So we're going to talk a little bit about what millennials look like, what they want, and how we can best service them. There we go. So, who are millennials? So you may have seen a Time magazine article recently who spoke about who are millennials. Time described them as the me generation. Millennials are lazy, entitled narcissists who still live with their parents. I myself am a millennial. Just want to throw that out there straight away. But I don't live with my parents. So if you type millennials into Google, one of the first things that comes up is millennials are killing bar soap. This is because millennials prefer to use liquid soap rather than hand soap. But because of that, we are responsible for job losses of hand soap companies. The second thing that comes up is millennials are killing the napkin industry. Apparently, us millennials prefer to use a paper towel than to use a napkin or a serviette. So again, we are responsible for killing a whole entire industry. The final article that I thought was interesting was from a newspaper in the UK called the Daily Mail. They are also responsible for Brexit, but we won't go there today. They refer to us as Generation Snowflake because we are so soft. Apparently we refuse to go out and buy our own milk as well. So we are certainly a much maligned generation. If you Ipsos Mori recently did a survey where they asked other generations to talk about the other generations and describe them. Millennials were described mostly as tech savvy, which most people would understand, but also that we are materialistic, that we are selfish, that we are lazy, and that we are arrogant. On the other hand, baby boomers are described as respectful, hardworking, community-orientated, well-educated, ethical. So this sort of leads me to say, okay, do we want to focus on this millennial generation? Well, the answer is a resounding yes. And there are three key reasons why we should be focused on this generation. The first is our purchasing power is set to overtake Generation X in the next couple of years. We've been the most populous generation for a number of years, but as is the considered way of the world, that one generation will replace the next. We are now getting to a stage in our careers where we have more disposable cash, In fact, if we're living with our parents, we probably do have a lot of disposable income. But we are now at a stage where we have money to be a really attractive segment for all elements of society. The second, as we've been hearing in the previous presentation, is that we spend a lot of time online. One of the statistics we saw recently was that millennials in the US will spend an average of 53 hours per week online. That's 7.5 hours a day. I was listening to Amazon this morning, and they said actually if you include TV, you're actually more like looking at 11.5 hours a day in front of some sort of device or screen, which is an incredible amount of time. Millennials, I saw another report recently saying that 2/3 of us will take the phone to the bathroom, such is the angst that we have about being away from our mobile device. But the reason why this is important is that 1/3 of us have never walked into a bank branch. 2/3 of us are already banking regularly online, and 3/4 of us are willing to take financial products from those brands that we really trust, which the brands that we engage with on a regular basis. The third thing is that millennials don't like credit cards. Across the Western world, we are seeing transaction and credit cards plateau and decline in some markets. The use of debit cards is rising exponentially. In the US, which is one of the most common areas for credit card usage, only about under 1/3 of millennials actually carry a credit card today. And there's some big reasons that are driving this. The first is that millennial generation is the first generation to be poorer than their predecessors. And we are more indebted than our predecessors. So a couple of things driving that is the high growth of house prices in the Western world, the increase in tuition fees, college fees in a number of markets as well. So we have less disposable income. The 2008 crash had a huge impact on the psyche of the millennial generation. Every millennial will know someone who lost a car, who lost a house, who lost a job, or is still trying to find good employment as a result of the crash in 2008. So that really impacted our psyche and our attitudes towards credit. And there's plenty of surveys out there which show a growing aversion to just the term credit cards and credit. The third area is our need, because of that impact and because of those two impacts I just spoke about, is our need for control. So credit cards provides great flexibility, but it doesn't provide the control that many people are looking for around how they manage debt and credit. So what's happening today? So those are the things that are driving our mindset. But in terms of what we are seeing, consumers of all ages are moving to alternatives providers of finance. It's more pronounced in the millennial and Generation Z segment as well, Generation Y segment. So just a couple of statistics to throw out there. So in the US, and this is some research from MasterCard, 40% of millennials are regularly choosing alternative finance options. That's financial options not from their regular bank. In the UK, 50% of 16 to 35-year-olds have already had a loan with an alternative provider, not their bank. In the UK, you are 2.5 times more likely to use point-of-sale finance than credit cards to purchase a TV. And in China and India, over 50% of Generation Y have already had relationships with a non-traditional firm. So you can see that this is not something that's happening in the future. This is something that's happening now, and it's happening at a large scale. The other thing that we're finding at Divido is that merchants really understand this, and merchants understand that the need to offer finance and to offer credit at the point of purchase is a huge driver for connecting with certain segments of their customer base. So what can you do about it? So one of the things that we do at Divido is we integrate with retailers, with PSPs, with e-commerce platforms. And you can see the screenshot on the up on the screen is one of our customers, Simba, which is a mattress company you may be familiar with across Europe. And point-of-sale finance is a common way of selling in that space. It's quite a high-margin business. And one of the really critical things is making sure that when the customer is making their buying decision, that you are there at the point of sale offering credit. If you're a millennial that doesn't have a credit card and you have an aversion to loans, this is the time to be offering finance to help upsell or to help get that deal over the line. There's nothing worse than a customer getting to this stage and finding they don't have enough funds to either make the sale or to buy the king size rather than the queen bed. The other element is that the checkout is getting increasingly competitive. When you as a consumer are checking out, it's not just Visa, MasterCard, and Amex you see anymore. You're seeing PayPal, Amazon Pay, Square are now offering installment plans. So making sure that you as a lender are there at the point of sale offering finance is really, really critical. But that integration with retailers, that integration with e-commerce platforms is difficult. And our platform provides that gateway for lenders to white label our products and platforms and to be able to deliver finance at the point of sale. I mentioned earlier we're live with over 1,000 retailers. These are just some of the brands we work with. Some of the key reasons why retailers want to work with us as well as lenders. I'll just choose a couple of those. Simba, within 1 day of delivering Divido on their website, more of their customers were choosing Divido than they were PayPal. Around about 45% of all their sales go via Divido. Such is the requirement for lending at the point of purchase. If you look at HTC, who leverage the Divido platform as well, they saw a huge increase in sales when they deployed finance at the point of purchase. So that's really it for me today. What I just wanted to reinforce was when you're thinking about millennials, the millennials are here and now in terms of purchasing power. It's not a 2025, 2030 aspiration. They have purchasing power that we want to target and channel immediately. The other thing is that they know what great online experiences look like, so we should be delivering customer experiences that are great. If you're a bank and that's not a core competency, then it's something that we do and can enable you as a lender to deliver a great online experience. Thank you.
You want to get some questions? I don't know if you want to take 1 or 2 questions.
Yeah.
We have a bit more time. Any questions? I'll keep them for the panel later. Yeah, I'm definitely feeling like generation has been right now. Thank you, Ian. All right. So, in keeping in the spirit of moving things around and changing the format of what we are doing today, what was announced as a panel debate on InsurTech on the board over there actually is going to become something slightly different. It's going to be a chat between me and Richard. For a simple reason is the other speakers did not make it. So bear with me. We're going to have just a quick presentation by Richard, and then we will just deep dive into some of the discussion around InsurTech. And again, because we have not that many speakers, we will be welcoming questions from the audience. We're going to try to keep it interactive too. But prior to that, let me do a quick intro. So, where are you, Richard? I lost you. Please come on stage. So Richard is actually, his background is in artificial intelligence, which is just scary from what we saw this morning, where it's controlling everything. And he's got a background in software engineering from Paris 13th. He's a specialist in new technology applied to the insurance and protection insurance. And he has been responsible for several functions inside BNP Paribas Cardiff, which is a technology innovation and IT architecture world, and some innovative projects at the international level. Richard is the co-founder and CTO at Digital Insure and all its subsidiaries. Please, welcome.
Thank you. So, nice to be here. Hello, I'm Richard Thibault, co-founder of Digital Insure, which is a French insurtech created in 2013. And our business is to offer digital services, especially in creditor insurance market for the moment. We are planning to offer the same kind of services in the whole scope of the protection business in the future. And our clients today are banks, insurers, and distributors, because we are able to manage and to provide services in all the value chain, so from the distributor to the insurers or the banks. And what we offer is a fully integrated solution and a full digital journey to subscribe and manage insurance products and insurance policies, where all the actors, so from the customers to the insurer to the bank to the medical advisors and so on, act and interact together in the same process in real time. Okay, and all that is possible because we have built a solution, one unique, brand new IT system that is able to that provides all those services. And this approach is very interesting for our partners, and the best proof of that is that in the previous 5 years, we achieved to set up strong partnerships with big companies like those ones. Okay. Maybe this one. Okay. Swiss Re first, so reinsurers, Swiss Re and SCOR. We use those tools to, for instance, provide online medical questionnaires. Insurers like AXA, Swiss Life, Revenus, and so on. Insurance brokers, credit brokers, and banks. Okay. So, and at each time we have deployed the same tools, the same software for everybody. And what are the different modules that we provide? All those modules can be provided separately. So, for instance, if someone wants just the simulation, you can have only the simulation. If someone wants comparison, quotation, or lead information, you can choose to have this module only. But you can choose to have both, and you can choose to have all the scope. So everything is integrated, and you have we provide the process in the entire scope. Okay, from the simulator to the end of the policy, in fact. So we are here to speak about trust technologies. So I will introduce some elements about trust technologies. In our context, we have 3 main concerns about trust technologies. The first is a SEPA mandate, because in our business, we must manage premiums, and premiums are monthly premiums or yearly premiums. So we have to manage SEPA mandate, of course. We have to execute IBAN controls using verification tools, of course, big generation, and as well as electronic signature. So everything is integrated in our solution. Since GDPR and other regulation rules, we need to add a consent management engine in our solution. So we put it a new module which is a generic consent management engine that is able to customize the text of the consent, of course, the number of consent, the triggering rules, the traceability also is managed by this modules. And we have built as well a one-time consent approach where, for instance, in a particular process, distributor will ask to the customer from this one-time consent the authorization to perform one act, for instance, helping the customer to fill his medical questionnaire. And of course, since we have a global medical approach, filling the medical questionnaire, we have a big medical data processing module, which is, of course, secured by the hosting solution we use. And here we have medical questionnaire, intelligent medical questionnaire, automatic decision, and all the services that are able to accomplish the subscription, in fact. Okay, so that's it. Thank you for that.
Don't go away, don't go away. So now we're going to have a little bit of a quick chat, and if we could keep that slide, actually, because I'm going to use that as a little bit of the background for our conversation. When we look around that, and the part on the right side and the part in the middle is kind of interesting, but I know we're in the fintech track, and payment may be completely irrelevant, but do you feel like some of the infrastructure that you're building for the insurtech world could have an impact on the world of fintech and can be leveraged? Again, trust is primordial. Or are you taking some of the key play from the fintech world or the startup world to bring that back into your own world? Where do you feel like, because the infrastructure is key, right? You have data, you have trust, and you have...
Infrastructure is key. And when I was working before in my career for a big company, a big insurer, the infrastructure of this insurer, I won't say which insurer, but the infrastructure was a bit late. It was very difficult to deploy new environment, new servers, new platform, new database. It was very difficult to migrate from one version to another. So it was very difficult, in fact, to develop new projects. And now with the cloud, and we use Amazon Web Services, for instance. With this, we are able to deploy new infrastructure very quickly by copying one environment to another. And we are able to publish new tools and new software to our clients very quickly.
So actually, that's interesting, the parallel between, like, it's always about legacy infrastructure and what you have to deal with that you can't move when you're an incumbent, and the new player that can build from scratch always have that competitive advantage. At the same time, they deliver and they can provide services that actually the big companies...
But it's not opposed, to legacy, because we are able to integrate legacies. And our clients, like Société Générale, for instance, ask us to integrate our services to their legacy. So using API-based software is totally possible, and we do that.
So that brings my next question, actually. Like, for the world of insurtech, everything you're doing, who do you think are the primary beneficiaries, or who do you focus on? We talk about consumer, but or user. Do you feel like the insurer, or I don't want to call them the merchant, the providers are the beneficiary, the consumers, your business partners? Who are the main beneficiary or the main area of focus?
All the actors are beneficiary because, data exchanges is immediate. In the previous world, with existing products, you send mail or you have to send paper, and now everything is online. So you ask for something, you ask for a question online directly, you have the answer during the day or one hour later. So it's good for the distributor, it's good for the client, for the management team, for the medical selection guys, for doctor, for everybody in the process, in fact.
So I'll bring actually another question. I'm going to pull your background to there. We were talking about that earlier. The critical part for everything, payment, insurtech, everything is the consent of the user. How do you acquire the consent? Now my question for you, using your background in AI, right? We're having more and more machines making decisions for us or negotiating for us. We have bots. We've seen, like the Google AI machine making an appointment at the hairdresser on the behalf of a lady, and the person on the other side of the phone call had no clue actually that was a machine. How do you see that playing in your world and in the general world of like machines are catching up with us? I'm not saying like someone's gonna walk in and say I'll be back, but how do you see that having an impact on the consent? I'm going back to a discussion I actually with someone, Dave Birch out of the UK, was saying like maybe we should create digital passports. And on the passport, one marking will be H for human, and the other one will be M for machine. So at least when you deal with that digital entity,
when
know
I
what
was
you're doing.
listening, I understand your question. When I was listening to the previous interventions, one thing was a key driver. Trust is essential. So if you don't have trust, you cannot conduct business. Okay.
Mm-hmm.
So IA okay, but customers have to trust the decision. If it's automatic, it can be automatic. It must be trusted by the client. Okay, so it means that you should deliver the decision with a clear justification of this decision. It's not just the decision is yes or no. You have to provide the justification. So if AI in the insurance context is able to generate the justification of this decision, it's okay for me.
Okay.
If not, it's impossible. It's what we do in our medical selection tool. Okay, we provide the decision, and when it's not or yes but, we explain why at each time, and it's automatic. Okay.
So there is still the user focus or user.
Yeah.
The user still have a say in the decision and I guess can override it. But that brings like the other question: trust, I guess, privacy, consent. All these beautiful things lead to the box on the left, which is like regulation, right? So,
definitely.
Do you feel like regulation can impair or they can facilitate new approach, both in your world, in the world of finance? What's the role? How do you see the evolution of regulators that sometimes are 20 years behind the real world, and in some other countries, and looking like Iceland, for example, they are maybe like 10 years in advance from the rest of the other regulators? What do you think is the impact? Small
Very
question.
difficult, you ask me to foresee, in fact, the future regulation. No, but it goes always to the same direction. It's to the direction of the customer. The customer wants more transparency, wants more efficiency, etc. So, and security as well. So at each time, it will go to this direction. So you have to anticipate that, because it will go more and more in this direction.
So do you rely on regulators, or you just kind of ignore them?
GDPR, for instance, it's a very good thing for customers. So it's an opportunity. It's not a constraint today.
Right.
You have to take care of that, and you have to implement it. And maybe the best thing is to go above that and to do better. Develop new tools, develop new services, and so on around that.
All right. I'm going to just look around for the room. Is there any question coming from the room? Oh, we have one here. I don't know if we have... Oh, microphone's coming.
Do you see some other area in the finance industry where you could build a similar business?
Yeah, a lot. And 26 is very good. Banks, it's true. People don't love banks. They are banks in general. So it's completely true. So at each time, customers are disappointed by a company or a sector, you have an opportunity to do something on that. So there are a lot of sectors where people are not really happy with the services provided, in fact, I think, yeah. And insurance business is a good example on that.
Are there any other questions? The lights are quite bright here. Any other questions? Otherwise, I'm going to continue the grilling here. So again, going back to like other industry, that's fine, but I want to go back to the user. The user is important, right?
Yeah,
and going back to the discussion of consent, is you have like new regulation, GDPR. Okay, I say the bad word every time I say GDPR. And some of the audience actually just enforced their right to disappear. So thank you very much for the one who stayed. But we're also discussing more and more to the tokenization of identity, right? Tokenization of identity means you're going to have to get custodian. Who's going to be the custodian that's going to enforce the trust, that's going to guarantee the privacy, and that's going to be transparent, because everyone knows that tokens industry is very transparent in what they are doing, not. So going to your world, right, where you have to acquire a consent that's going to make a decision that can, like a medical decision, has an impact on an individual, on the user. Who do you think like is going ultimately liable if something goes wrong? The wrong AI decision, maybe the wrong breach, whatever that can be. And how do you think that now I'm going across industry, can this token, identity token, can be used for your industry, for the fintech world? Is that going to replace what we know in our world as the way to identify yourself?
You know, in fact, the token is just a technical mean, okay, a technical approach to do one thing is to get information. So at the end, what is important is to get the right information and to be sure to have the right information. So the date, the birth date of the clients should be of course good. The answers of the client should be correct, etc. So the token is a way to get this information, but those information you have to rely on. So it's important to be sure in your process, in the partners you have giving this information, is this information correct? So it's not linked to the token by itself. It's just
so that goes back to the trust.
To all the data behind. So you have to check and to verify maybe twice or 3 times the data that you get from those partners to be sure they are right. So you have to check. There are a lot of companies that provide, for instance, document verification, official document verification, where you can check that the information is correct. You have to do that, especially when you do our job, which is providing insurance contract.
So mostly data is the new money then, and we all know that.
Yeah, data is behind this.
But so again, like if the token is just a delivery mechanism of this data, I'm going back. I'm trying to get you in the corner there. I want to understand like on the custody side and the distribution, right? How does that work, and how do you leverage that in the slide is gone now, but the middle part of your 3 pillars, right? It's kind of rely on data. You have to use that, and you have to trust who's going to provide you this data, or the person using your data needs to trust you.
So first, you have to be sure that you check the identity of the customer on your site, and we do that with different approach, validating the identity card, be sure that behind it's the right customer. Validating is a mobile phone number, for instance. It's not just a mobile phone. It's only to be sure that it's this customer that is using this mobile phone. So, and at the end, once you have proved that it's the right person, okay, you can ask consents and so on. But at the beginning, if you are not sure that it's the right person, consents
means nothing.
Means nothing, in fact, yes.
So that's again, I'm going to check also for the sake of time. Is there any question from the room, or should I drill down on GDPR and some of these beautiful things? Again, like you have to trust, but the flux of data now and how you generate an identity, how you generate who you are, right? From a digital point of view, used to be very easy to understand. It was centralized, coming from a trusted governmental source, and now we're dealing with distributed network. I don't want to say the word blockchain, but that's what it is. Like your identity is distributed in so many places today, and you have to aggregate that into some. So I guess artificial intelligence can work, but you have to aggregate that. at what point do you think the distribution network or distribution actors for this ID is going to have an impact on your industry, where you're going to have to say, like, I may trust that person more than before, but I'm not there yet?
Yeah, okay. In fact, the question is, if you meet several times the same person, using different networks, different distributors, and so on. So
and the ID change. You have a little bit something a bit different every time.
Okay, and the difficulty, in fact, in our business, in addition, is that in fact the customers, the owner of the customer, in fact, at the beginning is the distributor. You cannot share, customers to several distributors, because imagine if you go to, I will say Meilleurtaux in France. I'm Richard Thibault. I will subscribe a policy, and after that you go to CAFPI, which is another network, a competitor of Meilleurtaux, and you say, I'm Richard Thibault, and okay, CAFPI will see that this customer has performed a simulation in Meilleurtaux. So you cannot do that. So databases between distributors are well separated. So you cannot, and there is no data exchange between those databases. So first, the distributor is in one distributor, the customer is in one distributor, not in the others. So we have to redo the identity process for each distributor, in fact.
All right.
So I don't know if it answers your question.
I'm going to go like that. Actually, I bring another question, because now with the world of APIs, you have actually data being shared indirectly through different channels and giving you sometimes the what I call like the godly answer, which you have to trust because it's coming from a big player. I'm not talking about data leakage, but you have to rely more and more on the trust is being delegated, right? And that's in the world of consent for the financial payment industry, that is critical, right? Because that means you can't really trust 100%. That's why I'm trying to go like, how do you handle with that it's not half trust, but that trust in question?
Yeah, okay. Our customers are located in our database, separated insurer by insurer and distributor by distributor, okay? And we have the same APIs that we publish to all of our customers, and an application that want to use our APIs have to authenticate itself to these APIs using another token, which is an application token, okay? And this application token is linked to a specific user in the system that have authorization, clear authorization on the data and on the services of our application. So it means this token has the scope to access some data and some services. So the important thing is to administrate that the best way, because it can be something dangerous in terms of security. So, of course, we have a team that administrates all those tokens, all the permission, the authorization of those tokens very, very precisely. And it's controlled several times, in fact, to be sure that there is no problem with that. So it's very important. And I think it's the same thing in every globalized platform or SaaS platform where data are shared, etc. So, of course. But we are able in our solution, and some insurers asked us, is to dedicate some installation of Multinet, which is our tool. And for instance, some insurers ask us to to install a new Multinet for them, just dedicated to them, to be sure that there won't be any problem in this sharing efforts. Okay.
So that's the classic say of trust, but verify.
Yeah, of course, yes.
All right, so I'm gonna check very. I think like we are almost out of time. Is there any other question from the room? We'll say it one time, 2 times, 3 times, gone. Richard, thank you very much for your time and answering and playing the game of the answer question that.
No problem. Thank you.
Thank you. All right, now we're going to move actually to the next panel, which is about the future of fintech. And I'm trying to see if my speakers from earlier are there. I see Jan over there. All right. 2 more are coming. I think I'm missing. Where is Georgie? Oh, from the back. We're going to get more people on stage than in the room. All right. Ivo, do you want to jump? I just closed. All right. All right, so I have a lot of questions actually for a panel now. You've all heard what they had to say before, and based on all my very long list of questions, I'm going to start with, is there anyone in the room actually that has a question to ask specifically to one of the speakers? We can get there later, but all right, here we go. It was not part of the plan, huh?
Yeah, that's a question for 26. Very often when we talk about neobanks or digital banks, we are giving bell and whistles figures like the number of clients, but we don't have the real figures, which are the average percentage of active accounts, the average revenue per account, and when these neobanks will be able to break even. So my question is that the landscape seems to be very overcrowded. What in your mind will be the percentage of fintechs which will be able to survive?
So I cannot speak for the others. However, in terms of profitability, we could be like profitable very easily. To be clear, we're really investing in new markets and new products, but like profitability is not an issue. I mean, like compared to traditional banks, we have low cost and low cost of acquisition. So I think like the real question is more for like the traditional bank business model. But I don't know how many players. For sure, there's like room for, I don't know, like few global ones. But then I agree with you, there's lots of new guys who are just launching their product now. I think it's already too late. But there's still room for lots of guys.
All right, thank you. So I'm going to go back to a regular program and then I'll reopen the floor to the audience. But I think that Georgie, Ivo, you had something you wanted to share with the audience. I don't know if the video is queued. Yeah. All right. So as I promised earlier this afternoon, what Ben Risoul has deployed is in production. It's real. It's not like smokescreen. It's not like thinking about doing something. They just done it. So if you want to take over.
Okay. Video. As I talked before.
Yeah, I don't know. There was a presentation that was ready to be queued.
Yeah,
oh, here you go.
Okay, but before, just a little bit here. As I talked before in my presentation, we have a big project developed by other banks in Brazil. It's based in blockchain. It's the first project in blockchain. Now it's running. It's okay. It's done. But it's not already launched because it needs some regulation for central bank in Brazil. 2 weeks ago, one of this bank is called the Sicob. It's a bank based in Brasilia, the capital of Brazil. It's a bank oriented for cooperatives. Change and transmit the money between Banrisul and Sicob together, and I can show to you the presentation. Here, let me see a little bit. This is the application of Banrisul. It's called Banrisul Digital. There's a lot of application in here. you can see the SFD, as I told in my presentation. Okay? Okay, now I will show, okay, yeah, I ask to the...
Olá, estamos aqui no Cicobi hoje para demonstrar a materialização de um importante projeto do Sistema Financeiro Nacional. Esse projeto foi denominado SFD, Sistema Financeiro Digital, e é, na verdade, um trabalho colaborativo entre 5 grandes instituições financeiras desse país, no sentido de modernizar o Sistema Financeiro Nacional usando novas tecnologias. E uma dessas tecnologias é o blockchain, que é uma tecnologia altamente disruptiva e promete mudar todas as indústrias, inclusive a indústria financeira. A primeira etapa desse projeto é a transferência de recursos de clientes dessas instituições financeiras, mas outras etapas virão em segundo momento. Nesse momento eu vou demonstrar o funcionamento dessa nova tecnologia. Bom, aqui eu vou acessar o aplicativo do Cicobi, né? Então, no caso aqui é o app Cicobi. Vou fazer o login na minha conta. Basta clicar no ícone de minha foto com acesso biométrico. Já acessei a minha conta aqui no Cicobi de uma forma rápida e simples. Vou selecionar o menu. A nova transação, o novo serviço que a gente está disponibilizando, que é o SFD, Sistema Financeiro Digital. Nesse momento, eu já recebo aqui a lista dos contatos das diversas IFs que fizeram adesão a esse novo serviço. Eu vou selecionar aqui o Krug, que é o CIO do Banrisul, e vou realizar essa transferência para ele. Então, observem que a própria solução já traz automaticamente todos os dados do contato, não é necessário mais eu informar banco, agência, conta, ou seja, é bem simples, basta eu informar aqui o valor da transferência. Vou fazer uma transferência de R$30, posso escrever uma observação, eu vou escrever aqui, ó, primeira transferência no SFD, é a primeira transação que está sendo feita. Vou clicar aqui em avançar, já trouxe todas as informações, basta eu colocar a minha senha, vou colocar a senha. E agora, clico no botão transferir. É isso. Extremamente rápido, fácil. Traz uma usabilidade diferenciada para o cliente na realização de transação financeira e para as instituições envolvidas, grandes benefícios, como, por exemplo, a redução de custo na realização de transações financeiras e também a redução da emissão de papel moeda, que é um dos focos também do projeto nesse sentido. Então, a transferência já foi realizada. O Krug agora já pode consultar a sua conta corrente, que ele vai ver o lançamento. Só para finalizar, eu vou acessar o extrato da minha conta corrente, onde é possível observar o lançamento de R$30 a débito. Tá aqui, débito, transferência de R$30. Na conta do Krug já deve constar o crédito respectivo dessa transferência. Obrigado.
Ok.
And by the way, that demo, it's not a demo, it's a real live, and Krug, who's on stage, has been asking to do a live transfer every time, so that's why they had to do a video, because he's getting very rich.
Okay, just to finish here you can see the application, the SFD. Don't forget the digital financial systems in SFD in Portuguese. And here, the contacts that I have, similar like WhatsApp. Vilaça, the CIO of Cicobi, is here. And after the transfer done by him to me, here you have the R$30. And here my balance. The real balance here. Okay, the R$30 here. Credit SFD. Okay? Thank you.
All right, so that was actually my first question, was to get the status 7 months into the launch of that blockchain integration by the bank in Brazil. So that's being done, and that's part of the topic of this panel, which is like the road to transformation. Is how do you do a true transformation when you're an incumbent player or when you're a new player? So we already got some question around, but I'm going to jump actually for Monkey. With your background in about every single industry you can think of, right? Is there more to payment than just money movement? At the end of the day, we all talk about payment as, okay, you need to send money in one way. We've just seen there is changing infrastructure, right? But is there more to that? And with your experience, like, what's your take on what's coming next? 2 minutes.
Payments at the end of the day is moving money. It's the way that the service is packaged. Yes. So what is the context in which you're doing this? And Divido, for example, is providing a very interesting service where you're really at the point of checkout, and then you can ask for payment facilities. And I think that there will be more and more of these services where, depending on the context, you will get recommendations, you will get suggestions in terms of services, and then behind that, the payment itself will be done in real time. So this is a great example of a real-time infrastructure. Still today, across the globe, we continue to have infrastructures which are not real-time, which are still based on batch. So you are a key contributor to making the US payment landscape a little bit more real-time. And this is what we're doing right now in Europe as well.
And just a fun fact, actually, what he was referring to was the launch of Zelle in the US. And what we have seen, and that kind of backed what Georgie was showing on the video, everyone thought that it will actually displace cash because it's real time and money is moving. And what you're hearing from the bank is actually, this is not the key element for them. What they are saying is like the reduction of paper checks is enormous. For I think Bank of America, they say they've seen a drop in the paper check processing in their center of like 30%. 1 check out of 3 is disappearing because of real-time payment. So that got an impact also on how the banks are doing their business, going back to the digitalization of bank. But I'm going back to the, go ahead. Go.
Yeah, on that, I think that it's back to the theme that we were discussing earlier in the day, that it's not about solving a payment problem, it's solving a commerce problem. So it's kind of the bigger picture. You can look at payments as something that's being commoditized, but also if you look, it's kind of like an onion where moving money from A to B is at the core, but then you need all the layers of value add. And it's not just talking about pay later, which is an area that I know quite well. You are showing in your slides that it's important to show not just at checkout when you're making a decision. It's too late, because if the person knows while they're looking at the catalog that they can buy the mattress for 500 euros or 12 easy payments of 40 euros, if they know it ahead of time, then the conversion is going to be much higher. So it's not just at the last minute. You have to really inject that into the entire workflow that the user goes through. So it's much more comprehensive. And the example of Uber, all these integrations where the payment becomes transparent, that's where the real value lies.
So, go ahead.
I mean, yeah, just to build on that, if you think about how people buy cars today, 20 years ago, you'd go to your bank and you'd get a loan. I think 90% of all new car purchases in the UK are now made with lending from the manufacturer or for the car dealer. If you look at fast fashion payments purchases in the UK, people buy online from the likes of ASOS and Topshop, and Klarna have done a great job in terms of developing a proposition where I buy 3 pairs of trousers in 3 different sizes, I try them on, and only when I send them back and have selected do I pay by invoice. And these are payments that, these are processes. You look at Starbucks as well, they have like a stored value card as well. These are all customer journeys that these players have built, rather than just a one-size-fits-all, here's a card payment or here's a loan. It's a really, really key area that banks particularly are at risk of losing out on the transactions because of these other players delivering these different types of services.
So actually, I'm going to go back to a discussion I had earlier with Richard, and I'm going to throw that, and maybe Daniel, you may be the best one to take that one, but I want everyone to answer on that question. It's like, that's why I call the rise of the machines, right? So we're talking about like AI, machine learning, tokenization of identity, disintermediation of the traditional payment instruments, how the machines are contributing or accelerating, the change, and what it will be like next year, right? Because this morning that during the panel on Amazon, he was talking about conversational commerce.
Yes, absolutely. And Microsoft predicts by 2025, 95% of all interactions, chat, phone, will be powered by an AI bot. So you may not realize that you're interacting with a machine, and oftentimes that machine is going to perform better than possibly a human. So this is happening as we speak. And the variability of things, I mean, I did my master's in artificial intelligence back in the days, and even then, when I was putting in place some of the first speech recognition systems, even for something as simple as automating a collect call where the consumer has to answer yes or no, the hundreds of different answers you could get from an answering machine to something in another language, to a four-letter word, all kinds of things. It's insane. Capital One has automated banking. So they've programmed 2,000 ways in which a person can ask for an account balance. So that's kind of the environment, is the context. I mean, Patrick Gauthier was talking about the word play or get, words that, depending on the context, could mean something totally different. But something as simple as a consumer asking for what is the account balance, there is 2,000 different ways that they can, but all of that is happening because the technology is at a point where the algorithms are better, the computing power, cloud computing, they're at a point where it can be, it is actually being rolled out in a very massive way. So
we're going a bit away from that. Everyone was trying to say like the user is centric. We need to be like user centric, and now we're going to machine centric, right? And payment is very far away on the edge now. So as player in that industry, how are you getting to manage that and protect me?
Just think about the conversation with Daniel. In Brazil, it's for the next year, I think so. The bank is moving very, very fast to implement a solution in artificial intelligence and cognitive computation. It's all the banks discussing very hard about this. So agree with you.
We're doing it in risk management with machine learning to prevent fraud. I mean, there are so many areas, marketing. Well, in my presentation, I was talking about AI that has the potential to recreate the relationship that we used to have with mom and pop shops. So imagine, for instance, if I'm a buyer at, I don't know, Hugo Boss, and I happen to be in Vegas, but I've never been to the store. Through big data, I could get an SMS from the manager of the store saying, hey, Daniel, we've never met. My name is Jose. I'm the store manager. I know you're not far. I'd love to grab coffee with you. And by the way, we just got the spring collection. I'd like to give you 20% on. So whether I take advantage of that offer or not, I'm going to feel like $1 million because I feel unique. Someone took the time to reach out to me. It's not spam. It's very relevant. So that's an example where AI adds tremendous value. So you can use AI to be very customer-centric if you do it right. Any technology can be used for good or for bad, and AI is no different.
Anyone else? Jan?
I think one of the interesting experiences I've had from moving from large corporates into a fintech is if you want to be customer-centric, then you've got to start with designing a journey that really is attractive to the customer. What I see from more established companies, particularly in finance, is that they've got a platform, they've got a set of capabilities, and they try and adapt what that existing platform is and try and shape it to meet the customer rather than the other way around. And I think that's the benefits of particularly of partnering with fintechs or working with fintechs, is that we are starting with a blank sheet of paper, and we can build, just like N26 are doing as well, is we can build a customer journey from scratch that really fits the customer need, that really is customer-centric, as opposed to trying to fit something that suits what we have in place today.
So actually, Jeremy, going on that point, so as I don't know which one you prefer, neobank, challenger bank, whatever is the word of the day.
Depends on the country. In France, we say neobank. In the UK, we say challenger bank. So
yeah, and I think Australia is a different one. But do you feel like you are in a unique position to, like we're talking about FinTech 2020, right? are you going to be the bank of 2020, or do you think other players may disrupt you as you are disrupting the traditional banks?
No, I think like we'll be the bank of 2020 and 2030 and so on. But I think just going back, like the relationship with the customer hasn't changed. I mean, we are like in the U shape where like the traditional bank right now are like in the worst position, because originally when you discuss with customer, when they talk about their bank, they say, hey, I love the guy who was talking to me as a person, and like the customer experience was good, like 10 years or 15 years ago. And then right now it's very difficult for them because they are trying to fit like this one standard thing, where actually in the future, where AI is going, is like this very personalized relationship again. So overall, it didn't change. Like from a customer perspective, a customer is still looking for a very personalized experience. So it's just right now we are in a gap where it's, I'm sorry to say that, but it sucks as a customer. But like overall, like that's what customer is looking for. Now I think there's like as a player, there's like two different key areas where you want to be. Either you want to be like the one that is like that has the interaction with the customer. So this is why N26 is really well positioned, because whenever you think about banking, you will go to the interaction that is like the smoothest, the one that is like more talking to you, the more that is more adapted to you and will be more personalized with AI and so on. And this is the direction we're going at. But it's not the only position where you're going to be, for instance, even in the payment industry. There's like also large players that are doing simplifying like the jobs for the others, like Stripes, where they are not talking to the customer, but because they are making life simpler for all the other players, they also manage to get like a big chunk of the game. So it's not anymore where do I sit in the layer, it's more okay, do I simplify the life for the others, or do I talk to the customer? I think this is kind of the two areas where you can be a winner in the industry right now.
So now that's a question actually for everyone on the panel, because I'm summarizing all the buzzword I heard today during all the presentation, right? I heard so many times omni-channel, and I heard bank as a platform, or single platform, or single data storage point, right? How, as provider of services, right? Let's focus on a bit of the user, but how you build your business is how do you reconcile the complexity of omni-channel and the fact that people want to also go to one destination. The example of like platform in China, where you go to one specific platform and you do everything in it, right? And the US, they're trying to do the same thing. Is how do you reconcile your business or your product offering and models when you have conflicting ask from the user?
I think that's probably one of our biggest challenges as an incumbent bank, because like Jeremy was saying, we still have branches, we still have advisors, and it is true that our customers, what they want is to basically use whatever channel they want at whatever time they want. And our work is to make sure that the person in the branch is going to have access to all of the information. The person on the call center is going to have access to the same information. That the website, the mobile app are all consistent. That requires a lot of work, and I'm sure you are also experiencing the complexities and the high level of investment required for us to deliver this seamless experience.
Talk a little bit about the Brazilian market. Okay, technology is not the problem. It's not proper technology. The problem is the UX, the CX, and the regulation. In Brazil, the banks is extremely regulated by central bank. So if the central bank becomes more flexible for some things, of course, the world will change for the banks, and technology will not problem for us.
I think one clear way to manage that is to invent or create like some new products that are more simple. Like when we're talking about like the checks, as soon as you create some instant payment, like the check is disappearing. Same as like peer-to-peer. Like as soon as you're capable to provide either a product, a feature, or a UX that makes like the life simpler for the customer, it's gonna work. I mean, look at like I don't know, Netflix. It's just because it's more simple to stream than go and buy a DVD. It's not like it's the same product at the end. It's just like they change like the interface. Like people, like when you talk to customers, they don't ask and say, "Hey, I want to stream something." They just say, "I want something more simple." I think that's the way to go.
If I may just, I think that the dichotomy between neobanks and incumbents and even the technologies, it misses the point. The real point is there are some instances where the services today do not meet the needs of customers. It could be millennials that have a different way of approaching things, but take, for instance, insurance, right? No millennial wants to talk to an insurance broker and spend time getting the insurance and then go through an elaborate process if they have a claim to make. So that's why companies like Lemonade in the States, 90 seconds to subscribe to a policy on your phone and 3 minutes to do an actual claim on your phone. No faxing of documents, no police reports, honor-based. That's what people want. It's the fact that the current way of doing things doesn't match the need. That's at the root of everything. It's not technology looking for an application or I'm old, I'm new. It's irrelevant. It's what's the need and how can we fill that gap.
Which actually is getting me to another question, but I want to turn to the audience. Is there any question from the audience? All right, so I ask my next question. Oh, yes.
I think earlier you talked about customer acquisition costs and how easy or hard that is for neobanks or challenger banks. In the UK, it's proved it's taken some time for challenger banks to really establish large numbers of customers. And if I were to ask you a question about profitability and payments being commoditized and despite all the exciting technology that some of the fintechs deploy, traditional banks don't tend to make money on the payment side. On the retail payment side, they make most of their money on lending and so on and so forth. So, the focus of the panel is the impact on financial service of fintech. So, fintechs that just do payments. I mean, how do you see them having a long-term? What do you see their long-term profitability, survival, or just by trying to survive on a commoditized industry largely?
So at Divido, our model is that we don't lend money ourselves. We provide a technology platform that enables banks to lend money. So every transaction that we are involved with is where the bank on the back end is earning some sort of interest income. So for us, our view is that if we want to expand and go into multiple markets and we want to help banks deliver finance at the point of sale, then those are the right transactions for us to attract ourselves to. So from a profitability and a margin perspective, we absolutely see longevity in that model. We're a transaction-based model, and for us, we are delivering technology. We rely on banks to manage the lending piece, to manage the regulation piece, and we are a software as a service. So from a Divido perspective, then I see absolute longevity. Maybe the question was directed at someone else on the panel, though.
I think also you have to distinguish which is something that could be a feature and this is like easily replicable by any player, and I would totally agree. Like for instance, like peer-to-peer payment is like, for us it's a feature. Like we're not even trying to monetize that. It's just like something that works, and like obviously it works real time. The real question is how you're capable to monetize. So right now, like in 26, we're like selling lots of products, and we're very happy. Lots of people are like subscribing to our premium cards. But the real question now, like for all the players, is actually how are we going to be able to create some new products? And this is what we're working on for many months or many years now. How are we going to be able to release some added value products that will distinguish us from like the incumbent players, but we're creating some added value for the customer. So it's not trying to, what we understood like a long time ago, is not about anymore replicating what like the traditional banks are doing. We're already doing it. That's cool. Like it works, and like we proved ourselves. It's now the real question is more, okay, let's invent some new products that will really cater the customers, because like no new products have been invented for the last 2 decades worldwide or limited in the US, or like very few players are capable to provide some new useful products, and this is where the added value will come and where like the winner or like the new winner will come.
All right. Any other question from the audience? All right. So I'm gonna jump on something again that Daniel, I think you say in your presentation. Change is the only constant. Just think about that just for a second too. How do you think that with all the and I'm going back to also the number Ian you were showing, like the millennials and the new user, you have user that got many asks, and you have to answer the scope that goes around. So change being the only constant, you also have like the variation of ask or test that goes with it based on the user. What do you think will be beside making payment invisible or making payment disappear behind the scene, what do you think is the next big thing for fintech to address in what I would call like the movement of values for the user perspective, from the user perspective?
Yeah. Well, from the user perspective is, some of the themes that I mentioned, like, convenience with security, but where technology plays a role, and the question before was interesting in terms of cost of acquisition. Take, for instance, the industry where we provide merchant IDs to micro merchants, right? 10, 15 years ago, it used to cost a bank more than $200 to onboard a new merchant. So you could not afford to onboard a very infrequent user. Someone is going to do $2,000, $3,000, or $5,000 a year of processing. They would have to process, 10 years for you to recover your cost of onboarding and tech support, etc. But when that $200 became $20, all of a sudden you can go and offer profitably the service to the masses, to many people that are micro merchants. That's an example. I know we do it. Companies like Square have been very effective at doing that. But that's where technology opens up. I'm sure, with remote KYC and stuff, you can do things very, much more profitably at a much lower cost base that allow you to push into areas and give people access to financial services and stuff. That, I think that's a theme where technology is being used to open and to provide more service to areas or to either groups of people or regions that have been traditionally underserved.
Anyone else on the panel wants to take that one? Ian? I know you were talking about the test and behavior of the millennials towards banking, and I think it was a very interesting topic. So how do you manage, and you're one of them, so please talk on the behalf of your generation, because we are all has-been. What do you think is the next ask from the user for the fintech industry?
I think two big things I think that have happened, particularly over the last sort of 5 or 10 years, which I think will remain the same going forward. I think one is a level of transparency that we probably haven't seen from traditional players and in previous generations around hidden fees, hidden costs. I think that's one of the big things that came out of the great crash was consumers demand to know exactly what they're paying when they're paying. And a lot of the new banks have a big focus around being more upfront and transparent. I think that will continue to be a demand from millennials particularly. I think the amount of time that we spend online, and not just millennials, but every generation now spends online, means that everyone knows what good looks like in terms of an online experience. And if you don't deliver a great online experience, then particularly millennials, will take our custom and our loyalty elsewhere. So I think in terms of what's next, I think those two things are really big things in financial services, and will continue to be really important going forward as well from a millennial perspective.
All right. Before we wrap up, is there any other question? One last chance to ask a question from the audience. Otherwise, I'm going to ask the tough question. Okay, one more there.
Yeah, that's a question for Monkey. because I think it's interesting to have this view of the experience of a BPC group with the Fidor Bank in Germany, because Fidor was supposed to be the digital banking example for the BPC group, going all over Europe, internationally, as I think. And now we see that this is not the case, and there was probably some resistance to change inside the bank itself. So I would like to have, if Muki can give more insights about this use case.
I can only tell you that yes, there was a change. So Fidor, as you know, Fidor is a leading digital bank based in Germany. So most of their activities are in Germany, and they also have operations in the UK. And BPCU Group bought Fidor back in 2016, if my memory is correct. And the strategy at the time was to deploy Fidor first in France and then in a number of other countries. Okay. However, as you know, we've changed the CEO, and the new CEO recently announced that we wanted now to focus all of our investments, all of our digital investments, on improving the digital features of our existing banks. Our existing retail banks, Banque Populaire and Caisse d'Épargne, and therefore we are now selling Fidor. Yes.
That was challenge strategy. I think that's as much you're going to get from Monkey on that. That's kind of the topic I guess you can't talk about. We have very few little time left, so I'm going to ask a wrapping question from everyone. That's going to be the same question, and maybe we can start with you, Ivo. You've been very quiet, but so picking up again from your presentation, Daniel, you have been picking up a lot of the stuff from your presentation. It was saying that AI is the new electricity, right? Now my question for everyone on the panel is, what or who will be the bulb?
Yes, it's a difficult question.
You want to start on the other side?
Let's start on the other side.
No, go ahead, Ivo. Ivo, no answer? Georgie?
No, it's okay.
That's okay. Well, it's a really very difficult question. So
it's just a bulb.
Yes, yes. I think it's real, but I think that AI is a kind of infrastructure. It's not like a bubble. It's like electricity. Mm-hmm. Okay, it's behind the bubble. Yeah. Okay, and we use that. We are using that nowadays, and it will be transformed in a strong power for every kind of business.
Georgie, do you want to take that as a collective answer from Ben Rees?
No, it's we are doing the same with other banks. We're develop project oriented for AI. For me, it's more than electricity. It's something that's penetrating this new generation, the society, and our clients. And certainly, as I told you before, is the next step for the project for the banks in Brazil and everywhere, I think so.
And don't be just focused on AI, by the way, it was just the stuff. I want to know the bulb that just leverage that, yes.
Yeah, so I think for AI, the biggest question is, like with many technologies, it can be used for something amazing, or it can, be used for something less good for the society. So if AI is used properly, I think it could generate a lot of good things, for society at large. If it's used in sort of in a wrong way, it could lead to, check Professor Harari, who talks about what could happen if AI is, you have a class of the society that becomes useless because they've lost their job, and then you have another class of the society, smaller layer, that becomes semi-gods because, you can play with the DNA of babies and have implants so that you're intelligent. So some people become semi-gods and the others are, scrambling to that could be the sort of the bad scenario of AI leading to bad things, but I'm more of an optimist, so I believe that AI could lead to a more just society and good things for the world at large.
So mostly you can either provide light or you can provide the electrical chair. One of the two, right?
Exactly, it's a good example. The same technology, two different outcomes.
For me, the bulb would be personalization. I think that at the moment, financial services are, to a certain extent, still one size fits all. And I think that we would all love as consumers to have really personalized services. Advice, recommendation, contextual, information.
The good thing of being the last, we have time to think about it. I think like electricity, there's just not one bulb. I think overall, like you will see as like personalization, but it's more, you will have to have like a mix of like the right scientists, that's including developers, and the right guys who are knowing like the customer, like to face the customer. Once you have like those two pieces together, then you can basically reinvent like whatever you want. But like you will need to tie those two things to reinvent bulbs, like TGVs, like a lot of like different like invention. And one of those things will be obviously like personalization, but it can go much deeper. You will still need to have those two things.
The bulb, I think, will be Divido. There you
That's
go.
it?
Nice, short and sweet.